Hi everyone. So what I'd like to do in this little video is just go over this problem that I did in class right before our break, just to go back over it. What is involved in exercise 718 is what we call bank reconciliation. And again, you have this question, it's in the book. Most of the information, if not all of it, is given. So if you could just kind of follow through with looking at that, where I'm getting information from. But the whole goal of doing a bank reconciliation, like I said in class before the break, it's really an internal control. We do it because we're trying to check up and make sure no one internally is embezzling from us, ciphering off cash. The goal is to balance our checkbook account with that of the bank. And what we're using is what's called a source document, a bank statement, a hard copy sent from the bank. So we're starting with their numbers, and then we're basically reconciling it so that both numbers match. So the numbers that you see here for cash balance according to bank statement was not a number that was made up. It will be given on the final, but that's coming from the bank statement. And then the other cash balance according to company's records is what we feel we have in our accounting system. Why the two numbers are different is primarily due to what we call timing differences. Because we've done things to our account the bank might not necessarily know about, or maybe the bank made some kind of adjustment to our account and we don't know about it. So again, at the end of this, we want the numbers to come out the same, which you can see they do. They both come out to 21,725. On the bank statement side, what is always added back is a deposit in transit. What's always minused out is outstanding checks. What a deposit in transit is, again, like I said, class, was money that you deposit in the account. It just hasn't cleared the bank as of yet. The outstanding checks on the other side are checks that you wrote out. You sent it to a person that you owe money to, and they just did not cash it yet, so it didn't come out of your bank account. One's a positive, one's a negative. So what they did is they took that positive 7,500, they minused out that negative 23,375, and that's how they got that 15,875. Once they subtracted that from the beginning balance is where they got the 21,725. On the other hand, on our side, we mistakenly recorded a check. We wrote out the check correctly. We sent it out. The person cashed it. The check was for $100, but in our bookkeeping system, our accounting system, we deducted $1,000. To fix that mistake, what we got to do is take the difference between the 1,000 and the 100, and that's where to get that 900, and add that back. Bank service charge is probably most of you familiar with. It's like an ATM charge. Maybe your bank account goes under a certain amount. That's a negative on that side. So the 900 minus the 4,500 gives you that 855, which is then added to 20,870, and voila, you have 21,725 on each side. That is essentially 718. In exercise 719, as I slide down here, what you need to do is journal entries. You're only doing the journal entries for the ones that are on the on the book side, or the balance based off of your records. So that 900 you see there and that $45 was determined up in exercise 718. Why you're recording these journal entries is because after doing this bank reconciliation, you realized that you made a mistake and you took too much money out of your cash account. So by debiting cash for $900, you're making it go up. Why you're crediting accounts payable for $900 is because you reduced it by too much. And that miscellaneous expense is really that bank service charge, because the bank charged you $45 for maybe ATM fees or something of that sort. You're going to record that as a miscellaneous expense and then also reduce cash. So that is it for exercise 718, 719. I hope this helps, and I will talk to you soon. Take care.